This episode of Collin Votes is brought to you by Jeff for Collin County. If you would like to donate or volunteer, or to get more information, please visit jeffforcollincounty.com. That's JEFF, the number 4, collincounty.com. Hi, everybody. So we're back with another episode here of Collin Votes, and I'm Shanna Monahan, your hostess, and here with my friend Jeff Williams, the candidate, of course, running
That's
for,
right.
Yeah, County Commissioner, Precinct 4, right?
Precinct 4?
Yes,
That's right.
I got it.
Yeah.
And today we're meeting to talk about kind of some kitchen table issues for Collin County residents.
Yeah,
right?
going to change things up a bit.
Okay,
and
great.
Not necessarily talk about political, hot rods, just, talk about things that I've actually been talking about with people that I'm seeing on the trail.
Sure.
So just basic necessity things. So if you're a resident of Collin County or thinking about becoming one, just kind of go over some of the more elementary parts of that. Stuff you really kind of take for granted.
Great. And stuff that, you think you might know everything about, but then you might pick up some new information today, right?
Right. You might show up and you're like, oh, wait.
Oh, I did.
Yeah, this is different.
Yeah, that's not what I heard.
Yeah, it kind of goes without saying, but no.
Well, you are the finance expert, so you should be able to shed some light on some of that for us.
Yeah, I think that's the aim here.
Okay. So where would someone start? Like, what do you think is the most fundamental building blocks of what we're going to talk about?
We can talk about, and when I say elementary, I mean that. So, we're talking about when you get here, okay, what are you going to do with your bank account? Okay. Is it still the same? Does your bank have a branch here? Are you going to bank remotely, so to speak?
Oh. Well, that's true. So we do get a lot of people kind of like newly immigrated to the area. I guess it's not immigration if you're moving from another place in the state, but you're moving from one place to another. Like
right.
you came from Louisiana. There's a lot of other people that kind of like came over with Katrina and whatnot.
Right.
Right. Okay. So you may have already had an existing account someplace, but maybe we don't have a local branch or something like that. Right.
Right. And plus, it's a good time to mention there's been a lot of consolidation in the financial services industry. So, I mean, there are banks that I used when I first moved here that no longer exist because they've been eaten up by these bigger banks.
That's true.
So it can be a pain, either way.
Yeah. There's not always a lot of, I think some people think that if you go with a bigger bank, a lot of times there's more benefits that come with that, but not necessarily, right?
Right. It really depends on what you want. I will say the larger banks tend to have more options, particularly in this day and age where technology is important. And kind of like in the brokerage industry, if you, just for example, if you were thinking about, wanting to trade stocks, which online firm would you go with? It really just depends on what you feel most comfortable with.
Sure.
And so you really kind of have to, you're really not going to know for sure until you get in there and actually, get your hands dirty and find out what they use. I don't necessarily recommend a particular bank or firm. It's just, I use what is comfortable with me, So
then that sounds like if you're thinking about, I need a bank or I need a different bank, you should spend some time maybe beforehand thinking about like, what are the pertinent features for me? Like what do I need to have in a banking establishment to allow me to move the way I need to move?
Right. What do I want? I mean, for some people, it may be a qualitative thing, a sense of comfort. In that case, you're probably going to want to lean more towards like a regional, local bank or a local credit union.
Okay.
I will say with those types of banks, they tend to be more relationship oriented. They like to get to know the local customer.
Yeah.
And I mean, it used to be where you could walk into a bank or a savings and loan and shake someone's hand and you can get, a line of credit or a mortgage.
Sure.
It doesn't work that way anymore.
No.
We've got credit scores and credit reports, and we'll talk about that later. But it's certainly gotten a lot more complicated, and it's put some distance in between the people that run the banks and the customers.
Sure.
So, but you can still kind of get that local down home feel with local credit union. Well, most credit unions are local because it's kind of like an association.
Yeah.
And I mean, when I went to the University of New Orleans, they had their own credit union.
Oh.
I know Texas Tech has one because I have a client who, still has an account there. Mm-hmm. And I think one of the benefits of using a place like that is credit unions tend to get better rates for, say, like a car loan.
Yeah.
They also tend to pay a little bit better as far as like savings accounts and CDs and whatnot. But I'm not really recommending somebody put their money in a savings account or a certificate of deposit right now.
Yeah.
Because even though rates are climbing up, they're still nowhere near where they should be. So, you probably want to go for something a little bit more exotic. But again, that's kind of like the warm feeling.
Yeah. Yeah.
So, but as far as like, say, the commercial banks go, they tend to, like I said, they have the technology. So if you sit down and think about, okay, what is it that I want?
Right.
What is it that's going to serve me best right now?
What's important?
Yeah. And what kind of options do I need? I mean, if you don't need a lot, then local makes sense.
Sure.
But also, if for someone like me, I work in a business where I actually still get a lot of checks written. So I like to have a bank that has an app that allows me to deposit checks and do it quickly.
Sure.
Because that's one of the things that'll happen with a local bank is, whether you're opening an account or whether you're using the app to make deposits, they tend to hold that money a little bit longer than, say, a major, nationwide bank.
Gotcha. Yeah. It's so funny that you mentioned checks. That's been something that's been a weird adjustment for me lately. Opening a business account, then there were a couple instances where I needed to do like an EFT or something, and I needed a voided check, and I'm like, oh, geez, like I didn't even think to get checks. Nobody uses checks hardly anymore.
Right, and
so,
you bring up a good point with if you're starting a business and you need business checking.
That's a whole different
ballgame. Right. That's another segues into a whole nother realm. But yeah, I've actually run into that myself personally. There's more there tends to be more scrutiny when it comes to opening a business account. Mm-hmm. So if that's the case for you, then what I would say is make sure you have all your ducks in a row.
Sure.
Because they're going to want to know specifically with the way the business was formed. Mm-hmm. So in Texas, when you start a business, whether it's a corporation or like an LLC or something like that, you have to file with the Secretary of State, and then they have to approve you, and then those are usually the kinds of documents that you're going to have around when you go to the bank. So your application, your certificate of formation, I mean, I couldn't list them all here, but
there's a lot that goes into that.
Yeah. But just be prepared that you're going to have to carry a lot of stuff with you. At least that's what I would do, because you almost want to be overly cautious because there's no telling what they're going to be asking for. Yeah,
and you don't want to go in there and have wasted your time and have to come back some other point in time.
Right. Especially these days where some banks, you can't walk in.
That's very true.
And sit down with somebody. You have to make an appointment now.
So see that raises one of the things that I didn't think about enough before opening some of my banking is really like, how often am I going to want to visit a branch or an ATM?
Right.
Or how often will I want to transfer money maybe through the app? And do I have that ability with that account? Like, that's a question to ask beforehand. So.
Yeah, and I've never really had the need for like doing wire transfers and stuff like that. Some businesses do, like in the real estate business, like a title company, they do that all the time.
Yeah.
And, do you still write checks? Do you still use cash? I'm finding I'm using cash less and less.
Is there
these
a
days.
Penalty for any of those things?
Yeah.
Yeah, these are all questions. And does there have to be a minimum in there? Do you get overdraft fees? Like, there's so many different, like, each one's a unique little snowflake these days with all the features. Like, you should really dive into the features to figure out if this is the right placement for me.
Right. And if you have, say, like a volatile business where you don't necessarily have a consistent stream of money coming in over the course of the month, say.
Right.
Then you're probably gonna be more specific in terms of, okay, do I want an account that's gonna charge me like a monthly fee?
Right.
Because I don't carry a high enough average daily balance, which most of them ask for now.
Yeah.
So that's probably gonna shrink your universe a little bit, because pretty much every major commercial bank now has they'll have a handful of options, but they'll all say, okay, this fee will be waived if you have direct deposit and or you carry, $1,500 balance every day, whatever that is.
Yep.
That's going to be something that you'll have to consider.
Yeah, very important stuff. And then you don't always have to do your business banking with your personal bank or credit
union.
Thank you. I was like, credit loan? No, that's not it. Credit union, exactly. So you can have them in different places. That's fine if the advantages, outweigh that for you.
Right.
Right. Okay.
And of course, one of the things they push nowadays is the debit card. And actually, one thing I will come down hard on is I tell people, the only place you should use your debit card is at the ATM.
Oh.
For security reasons.
Sure.
And I'll tell you, now some banks have learned a lesson from that and have said, okay, if somebody uses their debit card and their information is compromised, then we'll go ahead and make them whole again. But I don't tell people to take that chance.
Yeah, that's not the majority.
Right, because with a debit card, we're talking about cash in your account. With a credit card, that's that fake money.
Sure.
We talked about once upon a time. So it's a lot easier for credit card, like regular credit card companies, to fix a problem if there is one. And chances are these days, everybody's probably going to have a brush with a security problem.
Oh, yeah.
So you definitely want to make sure that your financial institution is on top of that, particularly when you open a credit account. So
absolutely.
But I do tell people, if you're not going to use cash, then use a credit card to spend. Don't use your debit card.
Yeah, I had that not too long ago.
Yeah.
I had to shut everything down.
Yeah, I saw you nodding. I was like, I've been through it. I know you had to have been.
It's so terrible. And the best part about it was that when I had to shut my account down because of some fraud, it didn't allow me to use. I couldn't take any money in, and I couldn't use any of the money that was there. But any of the automatic drafts that I'd already set up, sure the heck went through. Like, oh, that's great.
Right.
Thanks, guys. Okay. You can take it all day, but I can't use it. All right. Yeah. Okay. Okay. So that's probably like one of the most important building blocks.
Right.
With that kind of thing. I would say, you know what, honestly, even if you don't switch, like let's say you were with Capital One, they're kind of everywhere, right?
Right.
Even if you do move, you should probably go into your local branch, maybe, like the closest one, just kind of like familiarize yourself a little bit with the people, or like get a sense of like where it is, all that kind of stuff. So it's not a last minute situation where like, I don't know how to talk to anybody. I don't know how to find anything. Yeah.
Right. And you don't want to, it's good to introduce yourself so you don't have, you kind of know what you're expecting in terms of the atmosphere of that particular bank.
Yeah.
It's funny you mentioned Capital One, because there was a big bank, a popular bank in New Orleans called Hibernia that started to branch out regionally, and then eventually they were bought out by Capital One. So a lot of Katrina refugees, came here with their Capital One accounts.
Yeah.
So, but I mean, even they've kind of they've absorbed other big regional banks, and they've become more corporate.
Sure.
As the days wear on. So back at that time, we're talking 2005, there still might have been, a sense of the good warm feeling, with that place. But now, because of the way they've expanded and the amount of money that they manage, it's, see you later. It's totally corporatized now. So,
Well, we share a bank. And we had a banking representative that we had a very good rapport with, was very helpful and everything. And then when they got bought out by a larger bank, that person, then I don't know where they went. So now it's like completely different name, completely different people. I don't even know what's going on with my money. Yeah, it does lend kind of a weird feeling to it. So you should familiarize yourself with it.
Yeah. And I mean, there's still plenty of people that bank in the branch.
Yeah.
And
absolutely.
And of course, we I
not
brought you there because we
necessarily-
knew somebody that we trusted, and now she's gone because
See, that's that
the new
kind
bank forced her out. Yeah.
That's that feeling, that human touch thing, right?
Right.
But it doesn't mean necessarily, we're not saying that like if your bank gets bought out, that's a reason to leave or anything. Absolutely not.
Right.
But all the more reason why you should maybe see what the people who are local representatives of your bank, maybe how they might be. Anyways.
Yeah. It'd be kind of make it an audition for them.
Yeah.
And clearly the new bank in our case, didn't audition well. So
no, no. Oh, that reminds me of another thing. So I was going to say a second ago that sometimes it helps to just start to talk to your bankers about maybe what some of your needs or concerns are. Like if you were to just drop in and say, hey, I had an account with so-and-so and now it's with you guys. I wanted to talk to y'all, because a lot of times in that process, there are some changes. There's maybe new capabilities or less capabilities, and you should go find that out, because they might mail you a package from the new place, but that might not explain everything, and you might need someone to kind of tell you like, oh, okay, well, so here's some differences to what you have now.
Right. Yeah. And also, when I was talking about the audition, when we auditioned the new bank, and we discovered not only were the fees and everything going to change, but they weren't going to kind of grandfather us in, right? They weren't going to give us any benefits for remaining a loyal customer during the transition, because that transition was bumpy. So
it's a good way to put it.
Yeah. So it's a good idea to set expectations for yourself and then give them a chance to earn your business. But if they don't, then there's no reason why you shouldn't move on.
See, I think the way that you just said, earn your business, like you definitely put that in the best light, because I think any of the stuff that we're going to talk about, but especially starting with this banking thing, what you need to keep in mind first and foremost is your priorities, your needs. And then you go and you find the banking system that fits that the best, not, well, I'm going hat in hand to a bank, like or just thinking like a bank is a bank is a bank, and I'm trying to be acceptable to them necessarily, then, well, are they going to give me the situation I need? So, yeah.
And while we're on that subject, it's kind of like, it reminds me of the campaign. During a campaign, you have to get used to the idea of opening your mouth.
Yeah.
A lot more than you're used to, in front of a lot more people than you're used to. So, but I tell people, in business, clients and such, I will tell them, if there's something that you need or something happened, like let's say you just forgot to pay your bill and they charged you a late fee, which could be ridiculous. Yeah, but it happens. Call them up and say, I understand. I missed it. It was a total, mistake on my part. Can we get it? Can we get that fixed? And usually they will. Okay. So, or if you have a credit card and hopefully you're not paying interest, but if you are, you can always call the bank and ask them to see if they have a promotional rate or if they're just willing to lower it for you because you're a good customer.
Absolutely.
So it never hurts to open your mouth and ask for things. The worst they can do is say no.
Yep, that's very true. I was just talking to someone the other day about how one of the most important lessons I learned just in business and life and everything is getting comfortable with talking about your needs and your vulnerability. Because if you meet anybody, doesn't matter what industry they're in or whatever, and you say, this is the problem I'm having with my business, or this is the problem I'm having, personally, I need to find somebody for this or something. You never know where help is going to come from, or a good suggestion or an idea or something like that. So the more that you're able to talk about it with people, the more you can kind of like crowdsource a solution from other people. But it's hard to get over that a lot of times, I think.
Yeah, no, but talking it through definitely will do wonders for you.
Sure, for sure. Well, and that's also what you've been doing on the trail. So
yeah, trying to.
Tell me what you need. What's going on in your life? Okay. So that's kind of point number one. Now, banking is often a place where that sounds stupid to say, but it's often the place that people go to begin the stages of looking into a mortgage. Right? But not all,
Right. No, it's most people will start with what they know. So whether it's a local bank or a big commercial bank, you're probably going to go see the person that you know at the branch and say, hey, I'm thinking about buying a house. What do you guys offer there?
Yeah.
A lot of people, what they'll do when they're first considering a mortgage is their primary concern are rates, right? So on the whole, I would say, just in my experience, that if you go with, say, more of like an independent mortgage broker, you're probably going to get better rates there.
Okay.
I will also tell you, and we kind of alluded to this earlier, with banks that are in transition, that's especially true when you're getting a mortgage, particularly at a bigger bank, because that back of the house team is probably going to be turning over.
Yep.
So some things, it's a good thing to be wary of, because things can get lost in the shuffle, because the left hand certainly does not know what the right hand is doing when it comes to mortgage sales and the operations team.
That's very true.
And I remember I used to have a title client. Her husband was a mortgage broker, and he did a mortgage for me. And I was at his office one day, and it was funny because whenever they would always give a questionnaire to their clients once they got through the process, and 9 times out of 10, it was the operations staff that got blamed for something if there was a problem, which is kind of ironic seeing as how you never see those people. But the brokers loved it because they could always blame. They would even, kind of, troll them a little bit. They would go into the back office space and put up the surveys with a big circle around. Hey, they hated you guys.
Okay. Wow.
So yeah. So they had fun with it, but with the mortgage, certainly makes sense to start with what you know. But I would say the bigger banks, you're probably going to have a little trouble.
Sure.
But that's not a universal experience. I mean, sometimes there are really good reps who are on top of things, and they know the people that are working on your application, and they can get it through there, and you can get it turned around much sooner. I've been asking people before and even during the pandemic, for certain places it slowed down a little bit, but the general turnaround around here is about 30 days.
Okay.
So you can, and what I mean by that is from the day that you fill out your application to the day that you actually close on the application, it's about a month turnaround.
Okay.
So, but my experience up until the pandemic had been the larger banks took longer than that. Not that that's a deal breaker. But I mean, there are certainly ways that
it's just something to stay mindful of, really.
Yeah, absolutely.
Yeah.
I mean, it could, especially if you're moving here or moving from one house to another here within the county, time could be of the essence. So
very true.
With a refi, it may not be as important, but it is a good indicator of how well these companies tend to work, how to operate. If they can get that stuff turned around quicker, then you're probably dealing with a good outfit.
That's true.
On the other hand, a lot of independent brokers come and go. So, that's kind of the way the industry works.
Sure.
There's a lot of turnover with the businesses, in that industry, the independent ones. So on the one hand, you get the freedom of being independent, but on the other hand, you're at the mercy of the bigger competition.
Yep.
So.
Yep.
Sometimes if you're working with a real estate agent, they will have relationships, almost always do. They will have relationships with financial institutions and may even have a specific person that they deal with on a regular basis. If particularly here in North Texas with all the brand new construction, if you go into say like a model home in a new, an upcoming neighborhood, the salespeople there generally have mortgage brokers that they work with directly.
Yeah.
They'll put that in a little information packet that they give you. Although these days it's funny because with the supply chain issues and the market the way it is, I mean, the sales broker could be sitting in the model home for a month and not do anything because everything's been sold or they have a backlog. They can't, the builders are saying, hey, we don't have the materials yet. There's no point in selling this plot because we're not going to be able to build on it.
True.
So,
yep.
So yeah, I mean, if it's, if you're like me, I like to window shop. I like to go in there and just look at those places. But if you're really looking to buy, it's a lot harder right now.
Yeah, very, very true. So I have a question about this.
Okay.
It is admittedly a very personal one.
Okay.
I can't be the only person in this position. So in the not too distant past, when I was looking into mortgages and like what could be possible for me and things like that, one of the roadblocks. And I know you wanted to talk about credit importance.
Right.
I'm not going there actually, but
Right.
documentable income.
Yeah.
Because the majority of my income is cash payments.
Because we're self-employed.
Right, exactly.
Right.
So I don't have pay stubs to show people. I have a bank account. I can show you deposits. That's about it.
Right.
So any tips, any recommendations for maybe how to handle that?
Well, and it's funny you mentioned that because I think you and I have both learned that if you have your own business, then to the extent that it's possible, you should pay yourself a salary.
Yep.
That's the best way to head that off.
Yeah.
Because, like I said, it's generally if you have particularly a small business, like it's not like you have like a warehouse with employees and stuff like that.
Right.
That's its
different.
own.
It's a little different.
That's a running machine. You don't have to worry about that there.
Yep.
But if you work from home or you like I do and you're pretty independent, really don't have a lot of employees, do contract work, whatever.
Sure.
Just start paying yourself a salary, and it's actually easier to do now.
Yeah.
because there are a lot of virtual administrative services that you can use, like Square is one that just happens to be the one that I use for my own payroll.
Gotcha.
Of course,
that's a good tip.
Yeah. And of course that does cost money, but on the other hand, it helps you show consistent income to the on your application, and it also helps you in terms of, because you're making down payments on your taxes, so you're increasing the chance that you're gonna get some of that money back, or that you'll just be squared away.
Okay.
You won't have to worry about that, writing that check on April 15th or whenever it is you file.
Right.
So, but just to kind of get back to the application itself, obviously, one of the bigger choices you're going to have to make, particularly if you're married, is, okay, who's going to go on the application, right?
Right.
I don't know why. I encounter this a lot. We're programmed as a society. Once you get married, you just assume that you're going to share everything,
right?
Okay, well and this goes back to the banking thing. What we didn't talk about was, okay, what if you're newly married and you move into the area? Do you need to get a joint account? And being the financial advisor, I would say that's not necessarily the case.
Not necessarily, right? Yep.
Although we do what we can to encourage the ladies to get involved in the finances more, because it's
very important.
It's kind of buyer beware.
Yeah. If you earned it, you should know where it's going and what it's doing.
Right. And
that's
we just
about it.
Yeah. We can't educate you if you're not even willing to go to class.
Nope. Got to show up.
So, right.
Yeah.
So,
very good point.
If there's one of you say that, that's one way you can get around the paycheck thing or the business thing, is if you have a spouse who does have a steady paycheck.
Yeah.
Like in my case.
Sure.
My wife, I'm the entrepreneur. I don't like a set schedule. She does. So she's got the steady income. So, and she also has a slightly higher credit score than me. It may not, I don't know if it'll make a difference in terms of interest rates, but yeah, we might decide that she is the better candidate. Maybe we just put her on the application by herself.
Gives you more options.
Yeah.
Yeah.
Really, I think the only time you'd want to do it together, because in Texas is a common law state, so you're gonna get half the house either way.
Yep.
Right. So, but as far as the application goes, the loan itself, it doesn't hurt to have just one of you on there if that's better. But the only time I can really see that you'd want to join forces is if you need to combine your incomes because of the price tag of the house that you're buying.
Sure.
Right. And generally speaking, and this is a good time to talk about probably the most important thing that will determine whether or not your application is approved is, okay, how much debt are you carrying right now? So if you add up your car payment, your student loans, your credit card payments, all of that, what is that total as a percentage of your gross monthly income? So let's say that you make $5,000 a month. Okay.
Right.
You're going to take the total number of dollars that is already earmarked for debt and divide that number into the 5,000. That'll give you a percentage. Generally, I think the working number is 28%. So if your bills exceed 28% of your gross monthly income, chances are you're not going to get approved, because the loan officers are going to want to have room for not just the mortgage and interest, but also taxes, insurance, everything that comes with it.
Sure.
Whether you're escrow or not. So that's the number that they feel comfortable with in general. So now you could come into a situation where you have a lot of credit card debt, but if you have the opportunity to pay it off, you can just tell your loan officer, let's wait and file the application after I've paid this debt off, because that will shrink the percentage. That'll lower the percentage down.
Right.
So if you can get rid of one of those bills, pay it off so that it doesn't contribute to that percentage, then that's a way to work to kind of game the system a little bit, and then that'll get you under the wire.
Right. It's the debt to income ratio.
Debt to income ratio.
Yeah.
A lot of people think it's credit. It's not. That is the most important factor in
true.
determining whether you get approved or not.
Mm-hmm.
Your credit is really more about determining what your interest rate is going to be. Mm-hmm. And generally speaking, if you have 730, 740 is the credit score that will basically elevate you into the top tier as far as getting the best rate. And after that, it's just bragging rights. You know, people assume, oh, I want to get 800. And I'm like, well, no, you don't really need it to get the best rate.
Exactly.
So yeah, don't get so caught up in that part of it. It's really academic at that point.
Okay. That's a good point. I like that. So credit importance. We're there, right? We're talking about that.
Well,
kind of.
Yeah, we'll kind of come back to that. I think there's some.
Am I missing a piece about the mortgage?
Well, no.
Something else we need to say?
No. I think we kind of covered that, and I'll kind of go into a little bit more detail about, credit reports and credit scores.
Okay.
But I was thinking more in terms of, okay, so let's say if you're moving, maybe you're changing jobs.
All right.
I got a question recently. One of my clients said, Jeff, tomorrow's my last day. I want to know what's going to happen with my 401k. So basically what you need to know is when you terminate employment somewhere, it doesn't matter if you were fired, if you were laid off, if you quit, if you retired, the label that the company that administrates your 401k is going to change. So you have what we call people who are in service. So these generally means people who are still working with the company. Okay. And then usually once you leave the company, everybody gets a designation of, say, like terminated is just it's just a term that they use.
Sure.
Okay. At that point, that's when those funds will become available to you. But the day that you leave your job isn't necessarily going to be the day that the 401k company is going to know that you've left. Sometimes it takes a while for HR to get the information to the 401k administrator.
Oh.
So don't just assume, like tomorrow's my last day. Well, no, tomorrow doesn't necessarily mean, Fidelity or Vanguard or Merrill Lynch or whoever it is that has your 401k is going to know.
Right.
So you have to wait until their systems are
Gotcha.
updated.
Okay.
Otherwise, because that's the way the 401k works in terms of the legal and the regulatory aspect of it is if you're still a current employee, there's only so much that you're going to be allowed to do with it. And a lot of it also has to do with tenure also. So, but of course, if you leave, you got no more tenure.
Yep, that's true.
So you have to make sure the best thing to do is to check in with your 401k company and see if, say, hey, has my status been updated? I no longer work here.
Gotcha.
And they'll be able to tell you, well, we still show you as being employed with the company. So now, in some cases, if you're old enough and you've been with the company long enough, you may have the option to take all the money with you, even though technically they haven't updated your status. But I always tell people, just wait right. until it's official. And then at that point, what'll happen is usually that whole balance will be available to you. Oh. And then typically I advise people to roll that over into their own personal retirement account.
Gotcha.
And then because that's the IRS can't touch that transaction.
Yeah.
You can move it to your new 401k if you want, if you have one. Of course, sometimes that new company will make you wait before you're eligible to contribute to it. So and going plan to plan is a more arduous process just because of the paperwork and everything, and then your new plan administrator may be less effective than your previous one. It just depends.
Oh, okay.
Yeah, I mean, it's not a guarantee, but I tell people all the time, I just don't take chances.
That's the best way to operate, I think.
Yeah.
That's not with my money. No, thank you.
So there's nothing that says that you can't roll that over and then just start your 401k anew with your new employer. Okay. So that's pretty much how you want to handle that.
That makes sense.
That part of your life.
Yeah.
Now some people will come to me and say, well, Jeff, I had this stable value fund or something that I really liked in my old 401k plan. I want to keep it. Even then I will say, well, we talked earlier about how banks are merging together.
Yes.
Your boss could be bought out at any time as well. And there are times where with new clients, I've had to go on a treasure hunt to see if I can track down where that old 401k money is because they waited so long to take it out. And at that point, that company could have gone through 3 or 4 takeovers.
Oh, for sure.
Yeah.
And No idea where
and
it's
that could
at
have
now.
been 3 or 4 different 401k administrators.
Yeah.
So,
Oh, yeah. Well, that sounds fun for you.
so yeah, make things easy for yourself. The
Sure.
soonest you can get that money into your own hands, the better you are.
Yeah.
The better off you're going to be.
Get on
Trust
it
me.
fast.
Yeah.
Yeah. No, you're right. You're absolutely right. It's also one of those things that in the transition to a new job, it's going to fall off the radar. You're going to be more concerned with settling at the new job and all that kind of stuff after a hot minute. So might as well get on it quickly while it's top of mind.
Right.
Yeah.
And generally speaking, if you move the money into your own personal account, the company that you open your IRA with is probably going to have a lot more options available to you.
Yeah.
And so that would be enough to overcome, maybe the nostalgia that you had for some investments with your old plan. You'll be able to see, I can just buy shares of Apple if I want to. Whereas
Great.
I didn't necessarily have that choice.
Yeah.
Although we are finding now that there are a lot of plans out there that have too many choices.
Oh.
And because the 401k, and you and I have talked about this, the
Yeah.
401k universe and the IRA universe are completely different.
Yeah.
Because in the 401k universe, there are limits as far as what your employer can offer you in terms of financial advice. And I don't mean your employer literally. I mean in terms of who they can potentially hire to
Right.
manage that for you.
Right.
Most of the time, they don't hire anybody, or you don't have that opportunity, to pay a company to just manage those investments in your account for you. Most of the time, you're on your own. You have to decide how that money's going to be invested in that plan.
Yep.
And more than likely, the more choices you have, the harder it's going to be because
It's very true. You
Because
get
you
you
don't-
get swamped.
yeah,
with it.
everybody talks about how great choice is. Well, no,
Well-
not in a 401k, and there are like 400 funds sitting in there, and you have no idea where to start.
I don't even know what all this is. My problem is when I'm looking at an array of choices and I can't tell what the difference is.
Right.
I'm like, this looks the same as this. Why are they two separate things? And then I have to hunt through like 40 lines to find the one difference. Ugh, it drives me nuts.
Well, that's why it helps to have an advisor whose
Absolutely.
compensation isn't tied to how much money you have, or if
And
you got
even
that
if-
money in your 401k.
Yeah. And even if I find that one difference, I may not even understand how that would impact me.
Right.
Or like why I should choose that as an option. So you need a translator also.
Yes, exactly.
Right.
So, but
Eesh.
if you take my advice and you take that old plan and you put it into your own personal account, if you don't do the work yourself, at that point, I promise you will be able to hire somebody who can. So,
Yep. Yeah. All right. Okay.
so that's it in a nutshell.
That's a good one. Okay, so that's the point about retirement. Okay, so now let's talk about estate planning then.
Yeah, that's
Who is
it
that
may-
for? What is that needed for? Sorry.
It may not seem it may not seem like a big deal, but everybody lately, particularly on the trail, has been talking about all these people moving from California to Texas. Like it's just this new existential, leviathan that's just going to chew us up.
Yep.
Goes without saying, laws in California are different than they are here.
Very much.
So if you were smart enough and took Jeff's advice and got that estate planning done, the minute you got married or the minute you had kids, probably what you're going to want to do is update those forms under the state laws of where you now reside, which in this case would be Texas.
Right.
So now it doesn't mean that those old those wills that you did in California or those powers of attorney that you did in New York, it doesn't mean that they're not still viable,
yeah.
valid,
Okay.
right?
Yeah.
It just means you might have to do it. It might require a little bit more legwork if something awful should happen.
Sure.
But it's always a good idea to look at what your new resident state is going to have to say about it.
Yeah.
It's really just another part of the transition. Just get a lay of the land.
Right.
Find out who the players are and what, if anything, is going to change that you weren't expecting or weren't prepared for.
That's a good point. Yeah. Are there? Have you handled many cases like that? Or no.
Well, I've seen cases where people would present to me forms that they had created in another state. And again, like I said, there wasn't a problem with using them from a legal standpoint. It just made things easier if they adapted to their new surroundings.
Gotcha. So you haven't necessarily seen someone like losing an important part of their estate planning or something because they moved to a different state? or anything like that.
Right. No, it generally didn't
It's
spell
usually-
doom for people.
Oh.
It's just
Okay.
it just get all your ducks in a row.
That's good to know.
Yeah, and not, you don't want to be fragmented all over the place.
No.
You know.
No, it's very true. Let's have it in one spot, just all together. That's great. Okay, cool. What about someone who hasn't started doing any kind of estate planning, that didn't take the advice of doing it
Right.
at the outset?
You can. There are places you can go. You can find like templates online.
Okay.
You know, and all those documents are prepared with that state's rules in mind. But I would always tell you, if you can afford it, go to an attorney, because
Sure.
they're going to know better, and you're going to be able to customize it that way. You know, it will cost you your basic will package, you know, usually in the neighborhood of like something like $1,500. If you add a trust on top of that, you're probably looking at somewhere closer to $3,000 or $4,000.
Okay.
It just depends on what your needs are. But sometimes it's hard to know what your needs are unless somebody tells you.
Sure.
And if you go with like the template stuff, then you're not going to necessarily know if what you purchased is going to cover what you wanted in the first place.
Sure.
You know, or if it's going to be amended the way you wanted. So, but it's better than nothing.
Okay. I like it. And you would recommend that for almost everyone across the board. It's not something that you have to think like, oh, I don't have enough money for a will or something like that. Like, right? Like, that's basically, you're saying like, these are some basic things that most people need to think about doing.
Yeah, it should be part of every, you know, overall financial package. You have to, a financial planning package, I should
Gotcha.
say. Once you start your financial life, whether that's, you know, with a spouse or whether you're single, the best case I can point to is the artist formerly known as Prince.
Hey.
He died without a will.
Oh.
And just
I didn't
imagine,
know that.
just imagine how
Wow.
the state of Minnesota is trying to untangle that web
Yeah.
right now. You know, who is his heirs going to be? Who's going to get all that money? What money is going to go that way? You know, this company owns these rights. That company owns those. Trust me,
Wow.
you don't want to know what goes on to untangle that mess.
That's mind blowing to me, because he always seemed so very like savvy about owning his music and all of that. Oof, wow. Okay.
Yeah, it kind of seemed like he was, you know, ahead of the curve
Sure.
on most stuff,
Yeah.
but it turns out he wasn't.
Maybe it was just, gosh, that's rough. I'm not over that one. That was a hell of a loss.
Yeah,
Like, no, don't go. All right.
yeah. Purple Rain's a classic.
Yeah.
You know, classic '80s stuff.
Yeah.
So
Also just one of those people that just kind of like changed a lot of the ways that we looked at art and music and the culture at the time. Like, just very influential.
yeah, he
You know.
did, and I think
And an incredible, like, played so many different instruments, like just incredibly talented.
yeah, he was kind of a prodigy.
Yeah. Okay. All right. So before we go off on that, let's get back to the credit importance.
Yeah. This is something I really want to stress to people, because I don't think everyone truly appreciates how big a role your credit plays in your life now,
Yeah.
as we sit here. I can give you a personal example. When I went to set up an account for the campaign, the banks wouldn't let me. And the
Oh.
reason why is one of the 3 credit bureaus, even though they had my current address on file, they still had my old address as my current address.
Whoa.
So, and what'll happen is anytime you open an account at a bank or a brokerage firm, or anytime you fill out a lease when you're renting an apartment,
Yeah.
anytime you fill out anything, basically, they will do what's called a soft pull on your credit,
Right.
on your credit file, that could mean that they pull reports from the 3 different credit bureaus, these being Experian, Equifax, and TransUnion,
Sure.
you know, individually.
Right.
Or what a lot of banks now will do is there's actually like a third party that will collate all that information together in one place, so that the bank only has to go to one place
Oh.
to see, you know, to check
Sure.
everything.
Okay.
And their primary concern is this, they just want to make sure that your information has not been compromised, that you are who you say you are, right?
Right.
So in my case, because I had 2 out of 3 in terms of my address being correct,
Right.
that set off a tripwire right away.
Sure.
And I mean, it's instantaneous because all of this is computerized now. And that's why I made a distinction between what we call a soft pull and a hard pull, which is a hard pull is done when you actually apply for credit. So that's a loan, a mortgage, a credit card, that kind of thing. But if you're just opening an account, they still look at it. So right away, they just assumed that there was a problem. So my problem was I had to figure out what was causing the problem because I didn't know.
Right.
And none of these people were informed well enough to tell me, and they're not going to tell me because somebody in the back office handles it. I was like, well, let me speak to that person.
Right.
And like, well, no, these people don't speak to customers. So the further I got into it, the more agonizing it became.
Sure.
So I had to go out, and now once your credit is pulled, you automatically get access to it. So you can call any of those bureaus and say, okay, somebody just pulled my credit. I want to see the report. And they have to give it to you by law for free. So, and you're entitled to see a report by law for free at least once a year. Okay, just throwing that out there.
Okay.
So if you haven't looked at your report lately, you should.
Right.
Because you never know. They can screw anything up apparently.
Well, and it should be said right now that they have all these apps and credit monitoring agencies out there now that'll do it for you for a fee.
Right.
But it's like, but you can look at it yourself every year for free, and you should.
Yeah, you should do it either way.
Yeah.
Whether you're paying somebody to do it for you or
Just
not.
do it.
Yeah, because again, like I said, and that's when I start out with a client, I do that for them because I want to make sure on their behalf that they have all the information accurate and we don't have a problem because that could affect something that we do down the road, Yeah. So it turned out that I had to scan these reports and see what possible issue there could be. What did they inadvertently, stick a freeze on my credit, or did they put in some kind of fraud alert or something like that?
Sure.
That could set off tripwires too. But it just turned out it was just an address problem. That was it.
That's wild. Something that small.
And the banks aren't going to let you, as hard as I tried to tell them, look, there is no issue with my credit. I knew that going in.
Right.
But just to be safe, I was like, I've looked at these reports.
Yeah.
There shouldn't be anything telling you that there's a problem here. So I had to do the investigation myself. And like I said, the person that's going to open that account for you at the bank isn't going to know what caused the problem. All they know is there is a problem, and that's as far as they have to go with it.
Yeah. So it's funny, you mentioned a phrase in there that kicked off a little bit of PTSD flashback for me, so I want to lean into it a little bit. So you said the phrase credit freeze.
Right.
So several years ago, I realized, and this was that back in the early 2000s, right? I pulled my credit report. I don't remember why. Maybe it was a car or something. And I realized that I hate to say this, my credit had been kind of destroyed. And a lot of it had to do with my parents using my social to open credit cards in my name, max them out, abandon them, all this. So I had all these like bad charge-offs and debts and things that I never did. They were not, but I knew I could tell by the credit cards that because they were like stored credit cards. I'm like, oh, I know where this came from. So
your family was financially abusing you then.
Yes, exactly. Which is why it's not surprising that happened then in my marriage, right? Oh, therapist, heal thyself kind of thing. Anyways, so I leaned into the credit freeze and put a freeze on all three of my bureaus. And it was the best,
right?
Because then it allowed me to, clean all that up. However, whether it was getting it dismissed or whatever I needed to do, but also not have to worry about what else, like where else am I bleeding from? And it also had an added benefit of anytime I would go into a store like Old Navy or something, they'd say, oh, would you like to open a credit card? I could automatically say no, because I knew that was in place and it wouldn't work anyways.
Right.
So it kind of kept me a little bit more in line and focused. So if you have a temptation to maybe stray financially, that's not a bad idea. And I will say another thing that makes it a great idea is that they're pretty easy to get off. So to have them removed or suspended or whatever, depending on the different bureau, some of them you can do them by website. Some of them you have to actually like type a letter and send it to an email address, and like 30 days later it'll come off or whatever. But a lot of them are just super easy. You call and just say, yeah, I'd like to suspend it. And okay, and they take it right off. So
yeah,
it's easily reversible is what I'm saying.
Yeah, you can enforce some self-discipline there. Yeah, I know that I see that a lot with life insurance, for example. You know, people they don't trust themselves to do their own, like put aside some money every month. If they get a bill from somewhere, that's like it triggers something in the psychology.
Yeah.
That that says, oh, I gotta, you know, this is where that money has to go, and I'm not going to get it back.
Yep. Yeah.
So now I will, if it's been easy for you as far as like the credit freeze thing, great.
Sure.
Generally speaking, I would urge caution just because you don't know who you're going to get on any given day with these companies. You know.
Oh.
You could. I mean, of course, you could call up anywhere and end up your call will be routed to Manila or something like that.
Sure.
But they're not necessarily going to be in a rush to help you. I'm a little.
You
more
mean like
cynical.
turning it on and off?
Well,
Like,
I mean,
what do you mean? Which part?
well, it could be just a like it's a language barrier, not like English to something. I'm talking
Sure.
about like a financial language barrier.
Oh yeah, yeah. No, I
And,
got it.
I mean, I've got a PhD in this stuff, so when I call them, I know what they can get away with.
Right.
And I can tell right away if they know what they're talking about or not. So sometimes I just skip the whole process. I'm like, can I talk to a supervisor?
Sure.
You know, I want to get to the, to the head of the snake, so to speak,
Yep.
before they even try and make me more furious.
No, that's a very good point.
So I mean, and you're right. You do have access to it digitally. You know, you can go. You'll set up your own account, and you can go in
Yeah.
and basically turn it off like a light switch. But the problem is, you may not necessarily know. It could be a very spontaneous thing where you need to have access to your credit, and if there's a freeze there, then that's going to slow things down. So, I will say that you can have an organized credit life, so to speak, without being overly cautious with the credit freeze.
Sure.
And if you just follow some simple rules, like one of them being, like I said, don't use a debit card anywhere. So you can, it might be easy that way, but
Sure.
but I generally tell people just assume these people aren't really there to help you. They're just profiting from
representatives of the bureau.
They're
thing
just
that-
profiting from a system that should have never been invented in the first place.
Well, it's like when I have to call and deal with insurance companies.
Yeah.
They're not here to help me.
Yeah.
They're here to keep me out, really, largely. Like, yeah. No, that's a good thing to keep in mind. Yeah. You have to know who's on your side, which is why it's important to have a financial advisor and a candidate that is actually listening to the issues and actually cares about, finding solutions for your problems, not their problems.
Right. Well, yeah. I mean, when I go out and walk around and knock on doors, it helps to remind me what I'm doing this for. Because I don't necessarily recommend it. It's not for everybody. Being a candidate.
That's not how you want to spend your weekends?
Yeah.
By the way, if you hadn't figured it out, don't do it this weekend. I'm pretty sure most people aren't going to want to hear from you while the Super Bowl is happening.
Yeah. That we're actually factoring that in.
Okay. So we've spent a ton of time on this. Anything before we go?
No, I'll just say anything we've talked about today, I've been more than happy to speak to anybody about. So you can contact the campaign.
Where can they reach you?
They can go to the website, jeffforcollincounty.com.
Great.
They can email us. We're on Facebook. We're on Instagram. We're on Twitter.
Sure.
So Williams for CC4.
Nice.
That's pretty much the handle for everything.
Williams for CC4.
Right.
That's nice.
Yeah.
Very, very succinct. I like
Yes.
it. Okay.
I had one campaign consultant. He said, "What is it with you candidates and these numbers? Why you got to put numbers to everything?" I was like, "Well, in 4, it is 4 FOR
Yeah,
and 4. I'm
yeah.
in precinct 4. It makes sense,
How old was that person? Have you met the internet? Everything's short.
They were younger than I was.
Oh my goodness. Jeez.
Yeah, so
That's crazy. All right. Okay. Well, this has been fun. I learned a lot. Love
yeah,
it.
Hope you did. I hope they did.
Fantastic. All right. Okay, guys. Well, thanks for joining us again for Collin Votes. This has been Jeff Williams running for Collin County Commissioner Precinct 4.
You got it.
I got it. And I'm Shanna Monahan, Wilder, I don't know, whatever you look me up as your co-host. Thanks again.
See you next time.
Bye.